I'm Sam Spring, President and CEO of Kincora. Kincora is listed on the TSXV and ASX with the ticker KCC. We're a hybrid project generator, recently just raised over 4 million Canadian with a 12-month hold period, backed by some leading North American names. We're in the process of drilling 7 different licenses at the moment over a 12-month period, so it's a really good opportunity to touch base, Matt.
Fantastic. Good to see you again, Sam. Very good indeed. In fact, we know a few of those North American individuals. Very, very good. Tell me, how did the deal come about? Because it kind of is a little bit unusual, a little bit different from the norm in terms of the way that you seem to have set this up.
It is. I mean, the last time we spoke earlier in the year, it must have been sort of early in the second quarter, Kincora had just gone through an overhang. We'd had a former larger shareholder selling on market. It was a block. It was really impacting the share price. We'd pivoted to this project generator model and seen exploration ramping up in the fourth quarter last year. And off the back of that cleaning up of that overhang, we were able to attract Jeff Phillips and Rick Rule to do a financing. And the really nice thing, again, having come out of that overhang, was this financing being done with a 12-month hold period. It was alignment of understanding where we'd come from, what the work programs were, how to build the business up over that sort of 12-month period that the capital would provide us runway for, and really get on with the existing strategy, which is what Rick and Jeff bought into.
Right, okay, so there's a bit of breathing room for you to actually focus on running the business, not chasing the market, which was obviously good news. In terms of the access to capital and I guess the networks of like Rick, Rule, and also Jeff, can you tell us a little bit more about that?
Yeah, I mean, it was really good of them to come in and open this up to their network. Say, for example, Rick, we launched on day one of his annual Florida conference. And went out to his network, and we've been able to really get some good North American names on the register. We hadn't really re-engaged with the North American market since we dual listed on the ASX. This change in funding model to more of a project generator model is more recognised in the North American market, and you can see that in the relative valuations. You might sort of see in some of our marketing pitch, we want to position ourselves as the leading project generator on the ASX, because it's not really a business model that's well understood or well embraced here. And generally in the exploration sector, one reason for that is generally when a junior does a deal with a major for an exploration project, it's not really a win-win scenario, it's a win-lose. There's not much value left for the junior shareholders, while the deals that we're doing and a number of other project generator peers are able to achieve is really a 1 + 1 = 3 scenario where the junior and the major are working together in mutually beneficial relationship.
Right, but you've also we've done a few shows on the kind of prospect generator model recently. I know Rick's a big fan. I've talked to him about it a few times. But explain to me why you think this has to be in someone's investment portfolio versus kind of regular exploration.
Yeah, I think one of maybe coming at it a slightly different way from our own personal experience, Matt, was we'd put $1 million into our flagship Trundle project in 2023. We got some good results. We'd by that stage done about 24,000 metres of drilling, and it didn't move the needle from a share price perspective or a technical perspective. And we were getting interest from some of these asset level partners, and we're still actually in conversations to monetize and bring in a partner for that project. But we came to the conclusion of, if we keep going down this way, we're not going to have a runway for our shareholders to do well, even if we make a big discovery here. So what we basically look to do is change the funding model, buy out our asset level partner, bring in and embrace this project generator model. And so far we've done 5 deals. That's unlocked about 100 million of partner funding. We've seen about 6.5 million of that go into the ground to date. 13,500 metres of drilling so far from the fourth quarter last year until 30 June this year. And that gives our shareholders exposure to multiple projects, proper meters, without that dilution at the equity level. And one thing that I've really come to embrace from this business model is shots on goal. You're looking to give your shareholders as many opportunities of making that big discovery. Any one disappointment isn't going to be a disaster to the share price, but any one big success will give you that multiple re-rating. And to put that into perspective, in a calendar year 12-month period, we're going to drill at 7 different licenses. Again, with your traditional exploration model, it's somewhat binary. The market will give you money for 1 or 2 projects at best, and then it's either technical success, a big discovery, an epic failure. And from that perspective, it becomes pretty difficult to keep going back to the same market, the same shareholders, particularly when the cost of capital has been high, like it has been for exploration over the recent period.
Well, let's come back to that phrase you use. It's 100 million in partner funding, because it sounds great, but what does it mean? What does it mean for you as the company? What does it mean in terms of future activities and I guess the ability to get after other projects as well?
Well, it makes it scalable. So again, there's 7 projects over a 12-month period that we're able to drill. So you're not just putting all your eggs in one basket. For us to earn in JVs, we're actually the operator and receive a management fee for it. So that's a form of income, which is hugely important, because not only are you not being diluted at the equity level from that raising going into the project, but you've actually got an income stream. And we've sort of come on the record that we want to be self-funding, that effectively these income streams cover our corporate costs. We're probably one more asset level deal away from that. And as mentioned, we've got a couple of flagship projects that we're holding on to, looking for the right deal. We've got that money already going into the ground for these other existing projects. So again, it's that runway to provide the structure for our shareholders, if we make a good discovery, to really benefit from that.
Okay, well, and we'll talk about some of the projects in a bit more detail in a second, but conceptually as well. Okay, you getting a management fee, so what? What do you get on the upside if one of these projects actually hits, is actually going to work?
Well, I think that this project generator model works really well for large copper gold systems. You've seen that, I guess, from an Australian perspective asset, Greatland Gold with the Havieron discovery. Newcrest was funding that, and Greatland Gold went from a £50 million market cap to 1.5 billion, so 20x funded by Newcrest. Reservoir Minerals in Serbia, a really good discovery. Freeport was earning in, ended up being bought out. That was 15x in a pretty short period of time. So these copper gold systems lend themselves historically very well. And then you have a look at a number of current day examples, and there's a raft of peers for them. I guess AMARC is a really good example of exploring in BC for copper porphyries. They've got 200 million of cumulative earn-ins with Boliden and Freeport. They've got onto a new discovery. They're at 285 million market cap. What I'd like to think Kincora could be, subject to our Trundle and Fairholme flagship projects being sort of farmed out and good, attractive deals, and getting on and unlocking what we think those projects could be from drilling that we've seen to date. That's where I'd like to think we could be for Kincora in 6-12 months.
But how do you, in terms of the paperwork and the agreement up front is really, really important here, because I think you'll have a lot of investors going, wow, you're giving away all of the upside into the future. Now, you've explained maybe why, spreading the risk is part of the equation, but can you drill down a little bit in terms of what the potential upside or the structure of an agreement could look like in terms of that upside? What could you retain?
Well, and each deal that we've been doing really depends on the partner and the asset and the stage. So it's not like a cookie cutter approach, and it's really, like I sort of mentioned before, 1 + 1 = 3. It's not you just want a group to provide capital. You want to actually have technical capacity that they bring, or technology. So 2 of our partners, for example, are private new generation AI groups, Fleet Space, Earth AI. They're different partners that you wouldn't think of your traditional copper gold diversified majors, but it depends on the project. But to come back to your answer, the question that you asked, Matt, in terms of what can our shareholders get out of it, all these projects that we're partnering for are potentially large copper gold porphyry systems. And if you ended up with 20-30% of the next Cadia or the next North Parks or the next Cal, you're talking billions. It's not a small asset, and this business model wouldn't really work itself particularly well for a small high-grade system or a VMS style deposit. Those mineral systems just aren't a particularly good fit. And I guess what we're also seeing with where we're at in the commodity cycle is a lot of the majors returning back to growth, and they're looking at a lot of jurisdictions that they've been before. So say, for example, using New South Wales where we are in the Macquarie Arc, you had Goldfields, you had Anglo Gold Ashanti exploring here last commodity cycle. Then they stopped greenfield exploration. Now they're coming back to earlier stage projects. We're sort of positioning ourselves almost as an outsourced exploration model for those majors because they know those projects fit their return profile in terms of size. They're comfortable with the jurisdiction. But for all the reasons why a lot of those majors didn't want to do greenfields or early stage exploration in terms of ESG, lead times, all those elements, that's what we as a junior can effectively achieve. And if we find what we're looking for, like a 10 million, 20 million ounce gold equivalent discovery, everyone's going to do well with it. They put their foot on it. And ultimately, you'd probably expect that's your natural exit strategy too.
Right, and let's be kind of clear about this 20-30% potential, what that means. Are you talking like free carry to a specific point at which you can monetize it, or do you get kind of diluted over time? How does it work?
Again, sort of each deal, each project depends. Like what we've got with Anglo Gold Ashanti, they're early stage, new district scale opportunities. One earn-in, say for example, is $50 million, 80% for them. If you've spent $50 million, you're onto something pretty big. And what we're looking for in that part of the Macquarie Arc is an extension, which is sort of in scale potential twice the size strike of what Vicuña is. So you're looking there for multiple discoveries in a new province. So again, it's sort of each deal depends on the specific circumstances.
Right, and I think so. It's something I meant to ask you earlier when we were talking about structure. Obviously, I understand the 12-month hold benefit. Brilliant. In terms of the current kind of shares outstanding and that kind of free float structure as well, is that to drive a more kind of tighter, more leveraged capital base ahead of these future discoveries?
Yeah, and it is that. And as sort of touched on, we raised that 4 million Canadian, that only closed early September. Rick and Jeff came on board. That was all out of North America on our venture listing. Concurrent with that, we did a 10-for-1 rollback. So we've only got 43 million shares outstanding post the raising, but probably more important than number of shares outstanding is before we raised, 40% of the register was reporting insiders on the board. Now you've got that raising that we've done with a 12-month lockup period. At the moment, we've only got less than 40% of our total shares outstanding as effectively being free float. So it is a very tight structure, really tight register, a high quality register. The nice thing is that it's not impeding the liquidity. The liquidity of our daily trading isn't picked up noticeably both on the ASX and TSXV, which is a really positive outcome.
So if I look at this prospect generator model and, you're getting management fees for drilling predominantly, it doesn't always have to be the case, but, predominantly, how much leverage, how many more projects can you take on without kind of stretching yourself, or with this new structure and certainly some of these backers? Is this something that you can really, significantly increase the kind of size and number of operations that you're putting in place at any one time?
We can. I mean, what we would like to do is our Trundle and Fairholme projects, which are our two real flagship assets. We haven't wanted to sell the farm too early. We've retained those. We're in active conversations with a number of different groups. At the moment, we're trying to get the right deal, and again, on this management fee basis. If we're able to do a deal for Trundle and Fairholme, that's where that AMARC example that I gave earlier comes into the equation. There is capacity for us to keep doing more deals, us being the operator, receiving those management fees. And I guess what we've said more recently is we'd like to get to a scenario where we've got 10 million of partner-funded drilling, which we're the operator for, getting a 10% management fee, and then your corporate costs are covered, and then whatever exploration we're doing on our 100% owned projects or picking up other licenses or doing geophysics and working up our project portfolio, we can fund from this existing 4 million that we've just raised from.
Right, and I know we talked about it last time out back in April, Sam, but you just remind us again, in terms of how you kind of measure success, ongoing success, and obviously future success is a bit easier, in terms of that kind of management fee growth, partner spend, retained project equity, your share price, etc. There's a bit of you which is incentivized to kind of keep going with management fees on projects which maybe don't kind of hit certain criteria. So how do you kind of keep yourself in check and make sure you're focused on the big upside further down the line?
Well, I think one of the nice things about this business model again is that you don't, particularly for the early stage projects, you don't need to be a geologist to understand, is this project going the right way? If Anglo Gold Ashanti is increasing its budget to us year on year and they're excited about what we're seeing, for your average investor, retail investor, that's your due diligence done. And the fact that these guys look under the bonnet, they come out to site at least once a quarter, you're having these earn-in meetings, informal committee meetings, talking about budgets, working through work programs. Again, that scenario of 1 + 1 = 3 is a better outcome. And I think that's where, from an investor perspective, the expenditure profile's really important. We've just seen one of our partners for our Mongolian assets walk away. They'd spent $1.3 million over the course of the journey. They worked out that Mongolia wasn't a jurisdiction that they were particularly thrilled about. That's great for us. We're loving having those assets back because we think that environment, particularly with Xanadu Mines having been bought out recently in a $160 million takeover, should put us in a pretty good state to find another partner and ideally a better deal structure for that asset than us. So there is this sort of, how do you explain the story, Matt, when you've got 8 assets, 8 of them all having value strategies, and again, trying to aggregate it to big picture sort of messaging of we want to have potentially $10 to $15 million worth of budget next year going in the ground that our shareholders have exposure to, drilling across however many projects. That's, as an exploration project, one way of measuring success. For us, also doing deals is one of the key things. We've done these 5 deals to date. Trundle, Fairhome, absolutely keen to get those into the right home with the right partner. Then it becomes self-fulfilling, more management fees, more money in the ground.
And we've not talked about this, I don't think, royalties as well. Obviously, you're prospect generating, you're creating the value here. Is that part of the economic mix?
There is, I guess, one of the pretty standard earn-in, usually if one partner gets to a certain stage, doesn't fund, it converts to an NSR. That's the sort of arrangement that we've got. Interestingly, we've got one agreement at the moment with Earth AI, a private new generation AI company, where they're earning in, and if they make a new discovery, they get a royalty. The scale of the royalty depends on how big the discovery is, what they spend. So there are different sort of, again, there's not a cookie cutter approach for these transactions. It's just tailing to the specifics of the project and what the partner brings.
Okay. And obviously, as you say, the endorsement that comes with some of these partners, well, who they are and if they're continuing to spend money, it definitely tells us everything we need to know. Anglo Gold Ashanti. Let's talk about them in terms of some of the work that which they're doing next door. Are you able to learn anything for your own targeting approach? Oh,
absolutely. No, Anglo's been a great partner. We started drilling with them fourth quarter last year. They have been in the district for a little while. They've done an earn-in with a Canadian company, Inflection Resources. Up until sort of 30 June, they'd spent about 16 million Aussie with Inflection, about 4 million with us. What they're looking for is a new province, a new district. And we've certainly benefited from the learnings that they've had there. But that's been able to, I guess, be more efficient with us. And we're really excited by the results that we're getting that across a couple of projects with them. Nevertire South is a project that we always highly rated, and we only recently secured that, went into a second earn-in agreement. We're drilling there at the moment with them and seeing really good results that's supporting our thesis very strongly.
Right, okay. So I think you're talking about, obviously got 8 projects, but in terms of the projects most advanced at the moment, what are they? the two, I guess, flagships, you want to call them that?
I mean, in terms of the most advanced projects in the portfolio, full stop, like Trundle and Fairholme would sit in that league.
Okay.
Trundle, we think, is a rifted off part of North Parkes, Australia's second biggest porphyry mine. Fairholme is directly on trend and adjacent to Cal, which is Evolution Mining's flagship asset. And both those projects have had extensive geophysics, a lot of asset level partners before. At Trundle, we drilled 24,000 metres ourselves. We put over $11 million of shareholder capital into that asset. So in terms of what's the most advanced assets, those would be, and I guess you have a look at Waratah and the success they're having with their cargo project, and one hole there recently added 100 million market to their market cap. They're over a 200 million market cap today. That's a very similar scale and a level of maturity as our Trundle Fairholme projects. But in terms of our current work map, Anglo Gold Ashanti is the most active drilling partner. There's probably 11,000 metres worth of drilling that we'll do in the first 12 months with them. We'll have drilled at 3 different projects over that sort of initial 12 months.
So, and what do you obviously you raised some money in September, which is great, right? But what do you spend your money on? Where do you think you add value? Because if you're drilling all the time with your own money, you're going to blow through that quite quickly. So when you sort of like going out and doing prospect generation and you're trying to do this setup and to give you the information you need for these big partners to kind of come in and have a look, where's the kind of skill set? What was the focus of capital allocation for you, just to understand the entry?
Yeah, and I guess to put sort of into perspective, since we went down the path of the project generator model, we only started drilling in the fourth quarter last year. Up until 30 June, we drilled 13,500 metres, over $6.5 million of expenditure. That was all partner funded. We hadn't actually, from a Kincora balance sheet perspective, done anything there. What this financing that we've just done, the 4 million Canadian that's disclosed, that means that we can spend a little bit of money in a very focused way. And when I say focus, say, for example, our Condobolin project, which is the one non-porphyry asset that we have in our portfolio, it's within trucking distance to a mill that's looking for third-party ore. It's a historical mining field. We've consolidated that whole district. We're just flying an airborne survey as we speak, and we're looking to drill what was a new discovery made by the previous explorer, but hasn't been followed up. And you have a look at the Cobar Basin, which is where this project's situated. You've just had Harmony enter the belt with a $1.6 billion takeout. There's scope for regional consolidation that's expecting to take place. And the nice thing about the Cobar-style deposits is they're historically high-grade, precious and base metals, and that's what we're seeing at our Condobolin project. So the strategy very much is spend a small amount of money in a very focused way, de-risk the project, and then from there we'll be able to reassess, see of milestones that we've got ahead of us been met. Have we added that value? If so, do we look to do it ourselves, or do we look to do it with potentially a natural partner already in the district?
Perfect. Okay, yeah, I was going to ask about that because that's was it gold, silver base metals. So what you like about that is the potential nearer term revenue opportunity for somebody. Is that what it is?
What we really like about the Condobolin project is it's not a porphyry project that's going to take a lot of time and money. You can see a potential mill there. You can see that we're within trucking distance, and this is a historical mining field where there's good high grades. So it's a project that a junior can add value to without destroying your capital structure and your balance sheet.
Right. Okay. And in terms of your business, in terms of this kind of, especially what you're describing yourself, you need kind of this first mover advantage type things. Not a lot of prospect generators out there. Certainly not in
on
Oz.
the ASX, there's not.
Yes, certainly in Oz for sure. So in terms of the competition on the ground, how are things changing?
Well, I guess looking at the Macquarie Arc, you've had Newcrest be taken out by Newmont, flagship asset Cadia, which is the big copper porphyry in this belt. North Parkes has been taken out relatively recently. Cal was acquired by Evolution a few years ago, but that's been a huge success. That's their flagship asset. And they're doing a huge amount of drilling right next door. And they've taken that resource inventory and added 10 million ounces to it. You've had Alkane with Boda Kaiser make a almost 15 million ounce gold equivalent resource discovery, and that's being recognised by earn-ins. So Newmont's doing earn-in deals. Anglo Gold Ashanti we've talked about, FMG's in there. Goldfields has come in with a private deal and just about starting drilling. So there's been potentially $385 million worth of earn-in deals by majors with junior partners looking for the next big porphyry project. And I guess in that neighbouring Cobar Basin, you've had Harmony just entering the district in the next month. That transaction with MAC Copper for the CSA mine should close. So again, there's plenty of corporate activity, but if you flip this from just a porphyry perspective and you compare it to, say, the Golden Triangle, and I was just updating these stats this morning, since May, you've seen a re-rating in the Macquarie Arc. The Explorers have gone up 2.5 times since May, but it's still less than a 500 million Aussie dollar cumulative market cap. You go to the Golden Triangle, which is north-south, the same strike. Geological, very similar. Sovereign risk, very similar. Shorter field season, more expensive exploration just because of the seasonality and the infrastructure. That Golden Triangle peer group has gone up 1.7 times. It's a $2 billion cumulative market cap. So it's really interesting when you compare geological terrains that are similar from a risk perspective. I think New South Wales has still probably got a little bit of time, a little bit of catching up to do relative to BC, Canada.
Yeah, pretty busy up there. And just with the partner model, certainly some of the bigger companies, in terms of the way that they report to the market, you want that success to be their success to be reported to the market, quickly. And be able to, share the good news. I mean, how does that work in terms of working with them and, how much they report and what you would like to report?
Yeah, and I guess that is a bit of a weakness. The majors are more focused on driving the value at the asset level rather than the news flow. And you get all the results back, you do the proper interpretation, you systematically advance these projects. And for us, that element sometimes is slow, but sometimes it's quick. And I'll give you the example, for example, with Anglo Gold, we started drilling at our Ningen project in the fourth quarter last year. We provide proof of concept that we were in the right rocks. Anglo suggested that ground gravity would be useful. We went out, got contractors quotes just before Christmas. Then after the sort of summer break here, after Australia Day long weekend, the gravity survey was taking place. We were drilling those targets in the second quarter of the year. We wouldn't have been able to be that quick without them. On the flip side, I doubt that a major would be going from tender to drilling targets within 6 months. So there are pros and cons, and ultimately what drives value, well, sustainable value is by what you do at the asset level. So I'd much prefer to have that roadmap where we're getting on and exploring more quickly and more efficiently than pumping the news out into the marketplace.
Okay. Now, I want to talk copper with you, and obviously I think you just mentioned, Bronze Fox project back in the fold. In terms of, because you've kind of got a sort of oxide component, you've got potential for SXEW there, and how do you kind of read the market at the moment with regards to what copper price is doing? And I guess more importantly, you've got some super comps coming out of Canada in the shape of Erdene and Xanadu. So how do you think you are going to come at the Mongolian asset going forward?
Yeah, and I might start with Mongolia, Matt, and come back to the market outlook and trends that we're seeing afterwards. But I think with Bronze Fox, I mean, that's an asset that I joined the company in 2012 for, because we had an offer for the company at around the market cap we are today. And we had 14 NDAs with pretty much every copper major you could expect looking at that asset. And then we had an issue with there were 106 licenses cancelled by the government. They were resolved and we got the project back. But Mongolia went from being the second fastest growing economy in the world to having a downturn when the resource sector as a whole did. We know that there's inherent value there. And others predominantly explored on just one small section of 3 really big near-surface intrusions. From doing some work a couple of years ago, our guys found a new third intrusive complex that we think is relating to the Shooteen lithocap. And for many years, people have been looking at the Shooteen lithocap. Where's the porphyry? Because the lithocap was a key part for BHP and Ivanhoe originally at Oyu Tolgoi. And Oyu Tolgoi is still on track to be the 4th biggest copper mine in the world by 2030. And that geological significance of if we can prove that our Shooteen North target is relating to the Shooteen lithocap will be really significant. But the reason in my mind you go to jurisdictions like Mongolia is for exactly like what you say. Erdeen's discovered a new district. Xanadu's got onto a big project. It got bought out. You're going there for big assets. And I think the low-hanging fruit for us with Bronze Fox is there's a little oxide resource that we've got within an existing mining license. We're just going through the process of getting an adjacent mining license, which could unlock the potential of that SXEW. When we last did the numbers on that at sort of 375 copper, it looked good. So if you put in sort of 455 a pound copper, that SXEW project sitting in the Gobi Desert, trucking distance to China, on a consolidated mining license is a project that it can be monetised. But again, what's the big picture? We'd like to think making that new discovery, that high grade part, where the majority of the work has been is, unsurprisingly, where the oxide is an eroded porphyry. The best part of that was washed away many years ago. There's much more exploration potential there, and you have a look at the scale of these systems in the Southern Gobi. For the right partner, I think that's a really exciting opportunity.
Well, it's effectively what Erding did. They brought absolutely the right partner in to kind of fund that kind of build out for them. But also, if you look at the kind of the model in models in South America, Chile, this SXEW potential to generate revenue, and they start small in places like Chile, but for companies like you, potential of regular revenue to then get after your projects how you want. I mean, do you understand that? Have you looked at it? Is that part of the conversation?
Oh, it definitely is. And I think getting the mining license, like we're going through the process at the moment, will really add a lot of value. And again, we weren't too disappointed when the projects came back to us because we think there's some really easy wins there, particularly in the current copper price environment that we're seeing, and particularly with what's going on. As you see, Erdeen's got to first gold pour. It's been a big success. You see the share price, ERD's re-rated really hard. Xanadu getting 160 million market buyout. If you look just on the existing resource that we've got at Bronze Fox, that'd value our Mongolian assets at $30 million just there. And really the eroded part of the system isn't what's driving the value for that project. So it is an asset. Again, getting it back, being able to go through the process, compilate all the data. There's some really good targets that came out of the field work that was done this year. So we're not in a rush with the Mongolian assets. We think there's some easy wins for us. And sort of coming back to that outlook for copper, I mean, gold's been very strong. We're seeing the gold majors probably being the more active, deploying capital, looking for partnerships, and copper porphyries with gold in them is certainly a nice playing field that the gold majors are coming in and certainly playing in. But you sort of factor in where copper is, it's starting to get a bid, and it's probably that second major commodity that's needed for proper hard asset rotation and a real, hopefully early innings of a commodity cycle.
Yep. Feels that way, doesn't it? And right, you've got this 12-month hold structure in place. You've got some money. You've got breathing room to do what you want to do. In terms of driving that kind of valuation re-rate, especially where's that going to come from in the next sort of 6 months or so?
I guess deals is first and foremost Trundle and Fairholme we've touched on. There's a couple of other deals, Mongolia, and a few things that'll come through in the wash that we're working on at the moment as well. So I guess corporate will add value, we think. Then drill bit. As touched on, there's 7 projects in a 12-month window that we're looking to drill, and shots on goal. Any one of those comes through with good results, and that's your re-rate, and that's why you're in the industry. Any one of them doesn't come through with great results, well, it's not your traditional explorer where it's relatively binary because it's a true portfolio approach. there's other opportunities in terms of, can we consolidate other ground? Can we work things up cheaply with geophysics, or like what we're doing at Condo with our Condobolin project with airborne geophysics across the whole license with focused drilling? It's not blowing that balance sheet, because we know how bloody hard it is to get that treasury on board. It's really working through this strategy and looking to add value across each one of those projects.
Sam, look, good to catch up. Nice to sort of see this, the kind of, I guess, new look to the company, and obviously the validation from some pretty hefty North American investors. You're off to IMARC now to tell this story. And hopefully they sort of take away what I've taken away, is that the setup looks quite nice.
Yeah, off to IMARC. There's a really good panel tomorrow. You've got Anglo Gold Ashanti, Newmont, Waratah, Legacy, Kincora talking about the next generation of porphyries in New South Wales, and that's why we're all there. So that should be a good panel. Then off to New Orleans conference coming up early November. Rick and Jeff will both be over there. Yeah. Looking to really get in front of a few of these shareholders that have come on the register recently and get the story better known of in that North American marketplace. And we've just gone through and got some new advisory board members. Again, advisory boards aren't really a thing on the ASX, but they are more of a North American perspective. And again, they're good people that bring specific skill sets, but that helps us re-engage with that North American marketplace even more.